Hi everyone, today let's talk about the jobs data, then we'll take a look at some of the charts and data. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So unemployment rate came in at 4.2% and payrolls rose by 142,000, which was also less than expected. So non-farms came in line with what we've been seeing with the data, but the unemployment rate came in line with expectations, which was a little bit better than I expected. I thought we might stay flat at 4.2%, or if we did get something worse at 4.4, that would be terrible. But 4.2 in line with expectations, slight step down from the 4.3. They also did revise down the jobs numbers for June to 118,000, revised down from 61,000, so that was not great either. And you can see we've been hovering at this pretty low level after we had been quite robust in 2022 and even here in 23, but now we are definitely hovering at pretty low levels. July was 89,000 and now we got this number here, so not great. Unemployment rate, slight step down, but I would expect that to just be an oscillation. This is probably going to continue to trend higher, something like this, 3.9, 3.8, next one 3.9, and then higher from there. So if that continues, markets are going to continue to sell off, so just keep this in the back of your mind. Moving over to fear and greed, we're down to a 39, back into fear from a 46, pretty significant step down here today. You can see these are some levels where you start to see some bounces, 37, 38, somewhere in there, and we're at 39 now, so interesting. Probably going to touch that 125 EMA at 53.40. Strength continues to hover, breadth continuing to hover, but starting to roll to the downside. We've been watching that on the shorter time frames. And then put call ratio, this has been rising. Still expect this to push into that 0.9 area. And then we'll see what happens from there, at least in the short term. VIX went higher as you would expect. And then bonds, both of these in fear now. Interesting to see that. So we're seeing almost fear across all of the markets at this point, except for strength and breadth. Generally, that's when you start to see markets bottoming a little bit, but we'll see how that plays over the next couple weeks. Moving over to the economic calendar just to see all of that. Eurozone GDP coming in below expectations. Earnings hourly for year over year and month over month, actually better than expectations. That's good for the consumer. And then payrolls, non-farms, not good. Private non-farms, also not good. Unemployment rate in line, thank goodness. And then the rest of this is not super relevant. Moving over to the charts here, you can see we did come right to my level at 540.34 at the end of the session. Held that level throughout. After hours, it's falling a little bit more. Momentum still bearish here. RSI still bearish. Volume not great. 1.68% to the downside, not super good there. Your next support would be 535.72. And then based on this structure, you would look for a retest of that 144 EMA, which is all the way down at 529.04. Everything's not looking great as you would expect. Obviously a big down day. And then looking at the hourly charts, you can see right after the news, we got a pop, tested some levels, and then immediately sold off 1% on that 9 o'clock candle right to this level. Consolidated here for 4 hours, which was pretty interesting. And then that next hour after hours, we did get the break of that level. So we'll see how that plays. My guess is this is probably going to sell to the next one during the after hours, either now or in the pre-market Sunday night with the futures. And then Monday morning, we'll probably see this 535.72 tested. So we'll see how it plays. But right now, obviously, it looks bad. Moving over to the NASDAQ, very similar thesis. Big down candle, 2.68%, looking for that 200 SMA as a potential zone of support at 441.38. You can see we fell right to the next level after hours at 446.66 after breaking 450.40. So right in that zone. If we hold here at the 200, this could hold as a higher low setup, and then you would see more of a wedge-like pattern, which could be interesting for charts. But right now, obviously, that 200 is your next zone, expecting to fall to that level. And then looking at it here with the hourly chart, you can see similarly to the SPY, pushed up, touched the level, sold off, big down candles first two, consolidated for a couple hours, sold to the next level after hours. So we are super extended on the short time frames, definitely could hold this, maybe get a slight retracement, that could be interesting, but right now we are definitely bearish. Moving over to the Russell and the Dow here, you got the Russell falling 1.9%, right to that 144 EMA, down at 206.04 is the next target. Fell $1 after hours, 206.50 is a zone of support in here. Could hold this zone. If it does, again, that would be a higher low setup, and then we'll see what happens. Is this going to be a wedge type pattern? You did have a high, slightly lower high here, looking for a low, maybe a lower low. But if this structure is going to hold, you would look for a lower low here. That could be interesting. And then looking at the Dow, this continued to fall like it did yesterday. Actually a little bit more aggressively, almost 1% on the day, more than 1% after hours. Your next support would be that 55 EMA down at 401.23. Either way, momentum and RSI on both of these are bearish. Quickly here, looking at the Mag 7, you can see we are still in this wedge pattern, testing this lower bound, testing that 144 EMA. If it's going to hold, it needs to do it now. If it doesn't hold here, we're probably pushing down to the 200, which is at 240.98, and that would give you an overall down move of about 4 more percentage points from here. That would be absolutely awful. Momentum is bearish, RSI is bearish, just like everything else, but that would be quite a significant break and a change in structure. So we'll see if this happens. Interesting zone here to watch for the Mag 7 on that Monday session. Moving over to Apple and Microsoft. Apple actually hung in there okay, 0.7 right in this consolidation. Still did not break the low from Wednesday session, which tested that 217.62 level. So Apple hanging in there, not bad. Everything's still bearish in the short term, but not terrible considering that dip low on Wednesday. And then looking at Microsoft, this is more what I would have expected. Microsoft still looks terrible, broke everything to the downside, new lows relative to these previous lows in this downtrend. This structure is now fully broken. We did get the retest and the further sell-off, still looking for 394.22. Moving over to Tesla and NVIDIA. Tesla did hit the price target with the gap up and test, and then today it did not survive the market sell-off. Huge sell-off back into this level here. So now this is a fake out breakout. You would expect this to continue lower. Momentum bearish, RSI bearish. So we'll see how that plays if that holds true. Big day on the day, 8.5% after touching that level, breaking this next one. So see how it plays. That was a super critical level right at these previous highs. Super important to watch these levels and have them on your charts. And now looking at NVIDIA, sold off 4%, momentum bearish, RSI bearish. This continues to sell from this consolidation as you would expect. Hit the 144 EMA. Selling off a little bit after hours. If this structure breaks here, your next one is the 200 all the way down at 89.12, and you would at least expect a double bottom here at that 90.69 level. So interesting critical level. If it breaks here, it's probably going at least another 10, maybe even 12% lower. That's a significant move, but this is a pretty volatile stock. Moving over to Amazon and Google. Amazon selling off, but again, not terrible. Amazon and Apple seem to be the stocks that are hanging in there in the Mag 7. Not terrible. 3.5%, still way worse than Apple, but it's still in the same trading range it's been in. Testing the lows back here from Wednesday the 28th. If this continues to sell, the next level is 167.06, and I would guess that it will, especially now that it's below all the EMAs and SMAs. And then looking at Alphabet, this did exactly what we thought it was going to. Big move down, bear flag, big move down, broke all the levels, 4% here. Your next price target is 150.26. Moving over to staples and discretionaries. Staples hanging in there, still above the 9 EMA. Momentum and RSI are starting to fade a little bit, but still very much a bull trend. And then looking at discretionaries, sold off 2.5%, broke back below this level, broke the 21. Momentum almost bearish, RSI definitely broken. Would expect this to sell to 180.10 at a minimum. Realistically, this is probably going to break and push to that 174.76 level. Moving over to 20 and 50-day breadth. Here you can see big moves down on breadth. Interestingly, the 20-day fell super aggressive. We expected it to, but this was a little bit more than I would have guessed. We're now getting into these levels where we found bounces here previously, somewhere between that 30 and 40 level. One more candle, maybe two, we're going to start to get into this zone. That usually indicates short-term bottoms, and then you start to see a little bit of retracement, so something to consider there. 50-day, on the other hand, still has a little bit of room before we get into those zones, somewhere between that 40 and 50 area back here. We're still in this 58 zone, still has to get back here. So 20-day looking like another day or two of selling. Then we'll see what happens after that. 50-day could go a little bit deeper. Just depends on how aggressive this gets over the next day or two. Moving over to yields. It finally did it. So we said it was going to happen this week, and sure enough, it did. 2-year down at 3.65. Touched the next level. Momentum RSI still bearish here. And look at that 10-year sitting at 3.712. So we're sitting in a normalized condition, just barely 0.1%, not even. Momentum still bearish, RSI still bearish, but it's hanging in there a little bit better. Yields continue to fall, but we're back into a normal yield curve between the 2 and the 10-year. Moving over to JNK and TLT, you can see both of these hung in there decent. JNK was 0.12, TLT was 0.01 to the downside. Both of these were technically negative, but look at that big wick, hit the price target finally at 100.05. I'm sure there were a bunch of stops here, so we got a first test, hit this trend line just barely right there. Then we'll see what happens after this. My guess is we'll continue higher here, but just a first test, waiting to see what happens after that. Structurally, bonds should continue to go higher based on the economic conditions, so I still expect this to continue. Moving over to the VIX, did throw a big wick in both directions, really didn't move a whole lot. Did test that 2250 level once again, could not get above it. Still think we might get a push to that 2889 level. Maybe that'll be the bottom of markets in the short term. This could take another wick or two to get there. Momentum and RSI still bullish there on the VIX, which makes sense. Markets continue to look terrible. Moving over to my accounts, of course, I lost a bunch of money. I tend to trade these covered calls. I was able to mitigate some of it, losing about $2,000 on a day where the S&Ps and the NASDAQ were down over 2% each. IWM actually did fine. You can see I only lost $150 with a $4 down move, continuing to sell those covered calls there. This is selling off a little bit more after hours. Probably should have rolled into the money there at 207, but either way, got $100 credit there. And then for the Qs, it's $409 for another $3.20 on each of those. And then I sold some 466s here for $2. So overall, about $5 credit on both of those, a little bit over 1% coverage for that Monday session. We'll see how it plays. I think it could go lower, but usually when we get these kind of big down moves, we get a little bit of a consolidation like we did the last time. So we'll see how it plays. Right now, definitely bearish, but looking for a little bit of a consolidation before we get continuation. Let me know down in the comment section what you think of the jobs data and how the markets are looking. Is it going to be sideways choppy and this is just a push to that lower bound? Or is this going to push into some lower lows and we need to buckle down for that bigger long-term downtrend? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.